Hello traders, good morning, good afternoon, good evening, and in case if you're watching this in the night, then good night for you guys. So in this today's session, we are going to talk about options buying intraday. So options buying, how to make money in options buying. Options buying, most of the people lose money because they don't understand the time decay factor. So only way you can play options in buying is playing it in intraday. You have to buy it at a specific point so that gamma can help you. Gamma is one of the Greek in options which can help you to build that money quickly and fastly. And which are those entry points? Today I'm going to show that in this video. Okay, before we get started, let's standard disclaimer. You have to always do your own research and please do paper trade or try to observe the learnings from here and practice before actually executing in the market. Okay. So in options buying, you have to specifically look out for these candlesticks, and this you have to look out on a 3-minute time frame. I'm talking about let's take an example of bank nifty. Bank nifty, why I'm saying bank nifty is because there is so much of volume in bank nifty, and buy and sell, bid ask quantity is good, so there is no liquidity issues in bank nifty. So always try to trade indexes because there is no liquidity issues. Stocks will have a lot of liquidity issues. You, whatever price you want to sell, it may not get sold at that price. So that's the reason we choose indexes to play uh, buying options. Okay, so you need to identify these two candlestick patterns. One is topping tail bar and another is bottoming tail bar. So you need to identify this setup and you have to wait for the finish of these candles and then take an entry. Okay, so the location of these bars is also very important. These bars always form away from 20 period moving average. I'll take you to the charts and explain you like in detail. Let's go to the chart now itself. Okay, let me maximize this and show you like what is so let me try and show you this spot chart. Okay, so let's get rid of all these things and just keep moving averages 20 and 200 and identify these candlestick patterns. So which is the best time frame to buy? I would suggest the closer to the reality. The closer to the reality you are, it's always better to play. So I use 3 minutes time frame. You can choose 2 minutes also. Don't choose 1 minute. 1 minute is too quick, and 3 minute is okay. 5 minutes is also okay, but stick to somewhere in between 3 and 5 so that your patterns are good and you can get good money. Why we choose lower time frame candlesticks is because our stop losses will be small. That is the only key. Otherwise in 15 minutes candlestick your stop loss will be very wide and you have to wait for a longer period of time for actually the movement to happen. So let's identify this. This is a bottoming tail bar. As you can see here, this pattern has formed. So on this pattern you have to take a strike below this pattern, which is 31,000 call. So you have to buy a 31,000 call after this candle completion immediately. Okay, let's look at the example. Let's take a look at 31,000 call. So here it is already open, so we can see this 31,000 call. Okay, so this was the point, or maybe this was the point here. Okay, let's look at this point. So here you have identified the market has fallen. You have to wait for this candle to form and then boom, you go and immediately buy the 31,000 call, which will be here around 291, and your stop loss will be here 274. So what will be your position size you can calculate 2, this is 290 minus 274. So you say 290 minus 274. So you have a 16 point stop loss. So if you have a capital of say risk appetite, say 1% of your 5 lakhs is 5,000, so you have a risk of 5,000 divided by your 16. So you can do 312 by 20 is equal to, you can do up to 15 lots or 12 lots according to the capital you have. So this is the calculation you have to follow, and you put your order, you put your stop loss, and see minimum target is about 16 plus 16, 32 points. 32 points easily you can get from 292 to 292 plus 32. Let's see, 292 plus 32 points, 324. So where is 324? It's bang on 324. Double your target. Okay, so this is 1:2 reward. You want to settle for a lower target, you can do that, but always wait for this. And also take a confirmation on this candle, volume will be usually high. The previous candle and this candle, always look out for the volume. If you're, see on this candle there is a lot of volume here because there is a lot of buying which happened in this bar. Okay, the market was falling, rising, and then on this last bar there is a lot of buying which has happened, which gave the push to the market to go up. Similarly on this bar, see, but the location of this bar is not below 20 period moving average, so I won't consider this. It should be always below the 20 period moving average. See here, see, there's a huge volume on this bar, so that means the buying happened. And then the next candle is this candle, which indicates you can go for a long entry here, 291, and then again it went up to 316. So minimum 20 points you can easily make in buying, and that too very quickly you can do. So let's look at some more examples. See here, this bar, but this bar is actually stopped you out, so this didn't work. So there's nothing 100%, but this will give you the maximum number of times. You can see the risk to reward is good, and when you lose, your losing will be only one bar. That will be your stop loss. So mostly you can have a good 50 to 60% of success rate, more than 60% actually I can say. Let's look at some other examples also. So this bar is also good. See, what is the volume here? All the small bars denote the volume for that candle, and here the volume has actually risen. So on this bar there is a lot of selling which happened, and here if you buy a put and put a stop loss, you can easily make money. And look at this. So you have to keep a watch on these kind of candles. Let's look at some more examples. Look at this bar and this candle. Huge bar, huge volume. Definitely you can go short. This is your stop loss. You have made a little bit of money, but here you have, the stop loss has been taken out. But if you have done the same thing again on this bar, then your reward is bigger. So when you get to see these kind of bars, then you have to buy a put. When you get to see these kind of topping tail bars, then you have to buy a call. Let's see some more examples. I have to zoom in a little bit. The location is very important, guys. So here you see the location. It is away from 20 period moving average. This is a small bar which is about 390, and this is your entry which is about 404. There is 10 or 11 points stop loss, and see the reward 430. Easily 20 points you can easily make. So in buying you have to be very quick. You have to wait for the particular pattern to form and then hit it strong and exit quickly. You know, have a 20-point target and exit quickly out of that, because usually this, whenever market drops, there is also a drop in the theta also, so immediately the prices drop very fast in options. So that's the reason most of the people don't make money in buying. So what are the rules? Let's go back to the rules section. So rules for creating, you have to wait for this pattern to appear and only then hit hard, and it has to be above the 20 period moving average or below the 20 period moving average. And once candle has appeared, calculate your position size with the formula which I have shown, which is, if you are taking a percentage, if you are having a capital of 5 lakh and your risk taking percentage is 1%, then your risk amount is 5,000. You have to divide that by the stop loss, which is 10 points or 12 points. The number what you get, you divide that quantity by lot size, which is 20 or 75 for Nifty. So that is the number of contract you have to follow, because that is the most important thing. You have to have a steady size and steady risk to reward ratio. Your risk should be always fixed. Reward can fluctuate 2 to 3 or 1:1 also some games, but you should never let your profits go, and your risk should be always fixed. And you can also try trailing your stop losses. It's not like that if the candle has moved 2 to 3 bars, trail your stop loss so that you lock your profits. And then always buy the strike which is below the price. Okay, always look out for the strike which is below the price, because that will be having good delta, so that price, it will not be out of the money, it will be in the money. And stop loss below or above the candle. If you are buying a put, it has to be above the you have to look at the candle which is forming on the Bank Nifty spot chart. And if you open the option chart, then usually if you buy the put also, the candle formation will be, the stop loss will be below the candle. And target, try to keep it double, but if you see that there is any reversal, always trail your stop loss so that you can easily get out at least 1:1 or 1:1.5, which is a good number. But in this, you don't have to worry about a lot of stuff. You just have to keep an eye on the market, keep looking for this pattern. If you get this pattern, go and hit it. I'm telling you, if you only follow this setup, you will make money every day. This works everywhere, whether it is equity, futures, options, commodity, everywhere you'll find these kind of patterns. Always validate that with volume and then play. Okay guys, thank you so much for watching, and do subscribe to my channel. I noticed that a lot of viewers are watching without subscribing to my channel. Please subscribe, and this will give me a lot of motivation to make good videos, and every week I'll be posting a new video. Thank you so much for watching.